tell us about the different timescales for trading, and would you say that most spread bettors make and close bets on the same day?
Yeah, I mean that does tend to be the fact. Most people who spread bet tend to be in for the short term. I mean, there is a feeling that actually spread betting is only for short-term traders, and I would disagree with that. I mean, there's no reason why you can't build and take long-term positions. I mean, I have done that myself over the years. I mean, back in, I sort of build up position. This is going back about 10 years ago, but I built up long-term positions in precious metals, for instance, and ran them for several years. And you can do that in spread betting just as you can do it in anything else. So there's no reason why you shouldn't. But nevertheless, from the point of view, if you look at sort of the FX markets now, if you look at the kind of spreads that are being offered, if you look at the speed of those markets, then there's an awful lot of it. There's an attraction in day trading that, and there's an awful lot of people who do day trade these markets rather than holding the position for a longer term.
Mm-hmm. Rolling trades versus future contracts. What's your thoughts on that?
Well, yeah, this is an interesting one. I like the rolling trades. I mean, it used to be that you really had to pick. You had let's take the FTSE for instance. You had a daily FTSE contract which closed out at the end of every day, unless you told your provider that you wanted to roll it. If you wanted a longer term bet, you probably had to go for the futures contract, whether it be a March, June, December, whatever it meant, September, December, and then that expired at the end of the third Friday every quarter, and you had all that to consider and all the ramifications of that expiry. So now everything's a lot simpler. You've got a rolling contract, you run it for as long as you like, and you close it out whenever. Now, that's fine where a cash market exists. But there are certain, in the commodity markets in particular, there are not obvious cash markets. And so you've still got to have futures markets on these. And I would sort of just say to people, be very aware, especially with things like oil, where you do have oil rolling contracts out there, but they are not based on a cash market, because the cash market in oil is so disparate. There are so many different types and grades and everything, and sort of the actual sort of physical oil market is a very complex thing, and people are trading all kinds of different grades of oil and everything else. So there isn't a one recognised cash market. So what spread bettors do is they base their rolling product on the futures market, and if you like, sort of count back. What this means is that when you switch from one futures contract goes from being lead to going off the board, you can get a big variation in price from where you're switched into one futures contract into another, and yet you still have a rolling contract. So that can make a very big difference to your price. So be aware of that. And you're not going to have rolling contracts on things like coffee and cocoa, because again, there is no real recognised liquid spot market beneath it.
Okay. Do you think there are other traders out there who keep holding positions for many months?
I think traders do hold positions for many months. I mean, you do see this. I've come across this, and particularly in individual stocks. I mean, I can think of a number of occasions where people have built very hefty positions, whether over time or have initiated a big position in a particular stock and decided to hold that for some period of time. So you do see that. I think it does depend, though, very much on what we're talking about here. So that is more likely in a stock, in an individual stock, than it would be in someone, say, trading the FTSE or the Dow or anything like that. So less likely than the indices to see a long-term holding. Quite common in an individual stock.
Okay. Do you ever see a day when, or do you ever imagine a day when providers might phase out futures contracts altogether?
It depends. I mean, I think for a provider, there are a couple of things to consider here. I mean, a provider wants to offer as much as the provider wants to offer as much as they can to the customer, because that's attractive. It's nice to be able to say, yes, we offer this, that, and the other. Now, that means offering commodity contracts where there are futures, as I say, so like coffee, like cocoa, whatever it might be, the oil contracts. So, However, on the flip side, the provider has got to look and say, well, actually, where is most of my business happening? And it tends to happen in the major stock indices and currency pairs, and then to a lesser extent, well, gold, maybe silver, and oil, which is the tricky one, really, because that's, you know, neither one thing nor the other. It's not. It's a futures market, and yet a lot of people, a lot of providers have this rolling contract on it. So, you know, there are some providers out there who don't offer a full range of products. They sort of tend to stick to to FX, maybe with gold and silver tagged on, but I think really, you know, you're going to end up with a bit of a mixture of the two, because I think that most providers want to offer everything, and so they're going to have to offer futures, because commodities are futures markets. If you want a leveraged market, it's got to be on a futures product.
And which markets tend to be the most popular?
Oh, the most popular markets for people to trade? Well, in this country, it tends to be the FTSE, the DAX, the US indices. Tends to be more the Dow than the S&P for some reason. When you think that kind of the S&P is a much broader market, and you know, the Dow is a bit of a funny index. And then, of course, it's the currency pairs, and euro-dollar is a big one, but also anything sterling-based. So we've got cable, so you know, the British pound against the dollar, but also British pound against the euro, or the euro against the British pound, and those tend to be the big ones.